Hi, this is Andrew Pang. Welcome to another edition of CMS Forex News. Today is Tuesday, July 8, 2008. In New Zealand, the latest business opinion survey remained at negative 64 for the second quarter. The report points to a picture of stagflation as firms experience rising costs while domestic demand eases in the face of higher inflation and borrowing costs. In Australia, the NAB survey of business confidence fell to its lowest level in 7 years, measuring negative 9 in June, a fall of 5 points from May. Firms say rising raw materials costs are cutting into profits, which is starting to affect employment. In Japan, economic conditions for merchants like taxi cab drivers, barbers, and others that deal with customers fell to a 6-year low. June's reading for the Economic Watcher survey fell to 29.5 as higher inflation curbs consumer spending, hurting business sentiments. The Aussie-yen pair fell for a second session overnight, touching 101.40, a 160 pip slide from its high yesterday. The yen gained as a result of a fall in stocks in Australia and other Asian markets. European stocks were down as well, but the yen gave up its gains, starting at 5 to 6 a.m. The Kiwi-US dollar pair tested the 0.7485 level, a slide of 100 pips from its open for the week. There was a move towards general greenback strength in the middle of the European session, as G8 leaders said rising oil and food costs pose a serious challenge to the global economy. Oil prices receded, falling back to $135 a barrel at one point. The financial sector led a broad decline in European stocks as they fall to 3-year lows amid concerns about credit markets. This put pressure on the euro-yen pair and it hit a low near yesterday's support level at 167.20. Oil easing brought some life back into risk appetite, and the euro managed to recover. The dollar-yen followed a similar path as it dropped overnight and was stalled around 5 a.m. Eastern. It rebounded to trade above its session open by noontime. U.S. stocks were generally in the green. Ben Bernanke in a speech said the Federal Reserve should expand its role and supervise investment banks in order to prevent and limit financial market turmoil. He also said the bank may extend securities dealers' access to direct loans into 2009, helping shore up strength in U.S. markets. In the U.S., pending home sales fell by more than expected 4.7% for May. The decline continued to be very regional, and housing prices are very attractive to buyers. Sales are expected to be more modest for the rest of the year. Construction activity is projected to be limited in the current economic environment, with the high inventory of homes and rising commodity prices. Inventories kept by U.S. wholesalers, the middleman between producers and retailers, rose 0.8% in May, matching expectations. Sales rose 1.6%, so inventories to sales ratio declined 1.08, continuing a trend of decline. The pound-dollar pair slid 115 pips in the New York session after it set an intra-session high at the 1.98 level. By 2 p.m. Eastern, the dollar had returned to the 1.9680, level it reached yesterday prior to the slide in U.S. stocks. Traders pushed aside the home sales data from the U.S. and focused more on Bernanke's comments, which helped with the dollar's advance. The dollar was also up in the euro in the session. Tonight, Australia posts WMI consumer sentiment along with data on home loans. Japan reviews figures of machinery orders. Overnight, Germany and the UK will release trade balance figures. Tomorrow, Canada posts housing starts and a light fundamental docket for North America. That wraps it up for the day in Forex News. Join us again right here at cmsfx.com. Until next time, happy trading.